speaking to you from the unceded lands of the Musqueam, Squamish, and Tsleil-Waututh First Nations out here on the West Coast. And I want to offer my respect and solidarity to them in their struggle for justice. Finance pensions and the phase out of fossil fuels. And I have the website there for our Center for Future Work. We've got research on this topic and many other labor economics topics, open access there. And there's my Twitter handle and the Center's Twitter handle. You're welcome to post from this presentation and join the conversation. So I've called this Let's Get Real about pensions, finance, and climate change and fossil fuels. And by real, I'm using that word in two senses. I'm using it in the motivational sense, of course, of let's get serious about this, let's get it done. But I'm also using it in an economic sense, thinking about the real economy and real investment, real production, real employment, as distinct from financial outcomes and financial activity. In my work, I've often made a distinction between what I call the paper economy, by which I refer to this enormous apparatus of very well-paid traders and brokers and bankers and financial innovators who spend their creativity and their time thinking up of increasingly exotic forms of financial assets, stocks, bonds, derivatives, forward contracts, short contracts, and everything else that they buy and sell in hopes of making a profit on the difference between buying and selling. That's a frenetic world, it's an influential world, it's a heavily subsidized world, but it is not a productive world. It is not the real economy, by which I refer to the place where actual working people drag their asses out of bed on Monday morning and go off to do a job producing real goods and services, the actual things that we need to survive and thrive. And to illustrate the real economy, I, of course, have chosen a beer factory. I talked about the necessities of life, the goods we need to survive, and that definitely includes beer. But it includes a whole range of other goods and services industries, including public services, where we're actually producing something of value as opposed to trading pieces of paper. Or nowadays, they aren't even on paper. Nowadays, they're all digital. That distinction between the paper economy and the real economy, I think, is very important to keep in mind as we think about pensions and the way that we can use our role as a labor movement in the pension industry to confront the climate crisis. So let's get real. First of all, let's get real about climate change. I'm an economist, not a climate scientist. You just heard from a brilliant climate scientist. And thank you, Simon, for your outstanding role in this movement, and you heard from Seth and you heard from Professor Chomsky last night. I don't have a lot to add about how serious this issue is, about the steady concentration of CO2 and other greenhouse gases, the direct link to fossil fuel energy use, and how we have to move quickly, steadily, and persistently to get this under control and limit the worst possible consequences. There's no doubt about what's happening. We know it fully well. There's no doubt about what we have to do. That means phase out fossil fuels from most uses over the next quarter century, not wait 25 years and then say we'll do it, but do it starting now. Do it quickly, do it steadily, and get ready to keep doing it, as Simon just said. There's also no technological or economic doubt about our capacity to do that. We absolutely can have a prosperous, healthy, inclusive economy that does not rely on fossil fuels. And I share Simon's optimism about the changes and the progress that's been made on the technological front and the economic front. So on a full cycle basis now, using renewable energies is cheaper. In addition to being sustainable, it's cheaper, it's cleaner, it's fairer, we can keep doing it, and it's cheaper. Did I mention? It's cheaper. So that's going to change the lineup of forces, and we're already seeing that. We're already seeing even among, investors and companies that don't care about anything other than their bottom line, suddenly raising their eyebrows and saying, okay, you know what, we can make money in that area, so let's do it. So there's no doubt about that. The thing that's standing in our way is a very narrow, powerful, vested interest of a small group of very wealthy people who are profiting from fossil fuel production and use and want to keep doing so. And they are putting that vested interest ahead of the planet's interest in a sustainable future. And they're using their influence, not just in the companies they own, but in the politicians and the media that they own, to try and delay and deny and defer the action that the rest of us need to know we need to take. And so ultimately, this is a political struggle, not an economic one. And in every other progressive struggle about the future of society, the organized labor movement has to be a powerful player, and we have to be on the right side. That means we have to engage in this political struggle to advance the long-term interests of our members and all workers at every table we're sitting at, and that includes pension funds. And I know we've got lots of discussions about what pension funds can and can't do, and the constraints and the regulations and the fiduciary responsibilities. But we still absolutely have to use our influence and our presence at those tables to advance this struggle, not inadvertently take the side of our enemies on it. Let's also get real about fossil fuel industries, fossil fuel production and use, and the Canadian economy, because that narrow vested interest that's trying to delay and defer and deny makes outlandish claims about how important fossil fuel industries are to Canada's economy, to employment, to workers. And if I can use the technical term in economics we use for this kind of thing, economists call it bullshit. Okay, bullshit is a technical term. It means hypothesis unsubstantiated by empirical verification. Okay, and this idea that Canada's economy depends on fossil fuel extraction, use, and export is bullshit. Short and simple. It is not a major player in the employment situation for Canada's labor market. The share of fossil fuel employment in production, extraction, transportation, processing is small and rapidly declining. It is also not that important in the overall financial returns of Canada's economy. And this is, I mentioned, because of pension funds. There are times, of course, in history when profits in the oil and gas industry in particular have been astronomical. And so in those times, obviously, it looks like certainly the capitalist class depends on fossil fuels. And in Canada's case, that's disproportionately true. But in the overall scheme of things, in the long run, especially when we're on the downside of some of the price swings that we've seen in fossil fuels, their importance is also modest. And we have done some work through our center cataloging the importance or lack of importance, or the relative position of fossil fuel industries in the overall economy. This is a catalog we developed of direct payroll employment in all forms of fossil fuel extraction, processing, transportation. And it came in 2019, this is before the pandemic, to about 160,000 jobs. Now, not for a second am I going to say those 160,000 jobs aren't important. They are important. They're obviously vitally important to the people who hold those jobs and the communities where they live. But that amounts to less than 1% of Canada's total employment. And we have gone through all kinds of employment transitions in Canada's history, if you study it. One of my roles is the Harold Innes Industry Professor at McMaster University. And if you look at Harold Innes's work, that's why I'm very proud to have that name attached to my title. It's all about the swings and ups and downs and transitions over time in our economic history, tied to different resource waves and the role of different resources in the economy, and how they all got adjusted and in some cases phased out because of technological change, changing tastes, changing global trade patterns. We used to be an economy that was directly and overwhelmingly dependent on beaver pelts. Okay, we all know this from our history. We don't export beaver pelts anymore, and it's not because we ran out of beavers, if you haven't noticed. In fact, if you've ever had a piece of land in the country with a beaver on it, you know you can't get rid of the damn thing, right? So this is not new, and Canada's economy has adjusted to those previous waves and will continue to adjust, including to the phase out of fossil fuels as our current staple product. So 160,000 jobs in 2019, that was before the pandemic. That alone was down by 33,000 positions in just the previous 5 years, due to lots of things, including the a rapid decline in global oil prices. And so this transition is happening. And it is happening relatively rapid. The erosion in the share of employment in Canada that's attributable to direct fossil fuel production from 1.23% in 2014 to below 0.9% in 2020, if we count the job losses that happened during the pandemic. That pace is consistent with eliminating this as a source of employment in Canada over the next 20 years. So we're already on track. This is already happening. The problem is it's not happening in a planned, deliberate, fair way. It's happening based on private business decisions, companies responding to global markets and price signals and what they see coming down the pike, and they're just throwing fossil fuel workers out on the street. And this is very important because we're often pressed as trade unions to think of our members, whether it's the members of our union or the members of our pension funds, and say their future depends on fossil fuels. And that we're being tricked, we're being lied to if we buy into that argument. The fact is, our members who work in those industries are indeed threatened by the imminent phase out and disappearance of this industry. There's no doubt about it. But doing nothing or denying that this is a problem isn't helping our members. There are 40,000 fossil fuel workers who've been thrown out of work in the last 6 years in Canada, and they're not being helped. They're not being helped by Jason Kenney. They're certainly not being helped by the owners of the oil and gas companies who are interested in one thing only, and that's cutting their costs to make as much money as they can while the sun is shining. They know full well this industry is going to disappear, and their goal is to make as much money from it as they can. And one way to do that is to squeeze workers, eliminate their jobs, convert them to temporary labor hire positions, cut their wages, cut their benefits. And that's what's happening. If we support fossil fuel workers, and I do, then we have to say, look, this change is coming. The employers and right-wing governments are going to screw you as this change occurs. We have to get organized and think about how to organize this change in a way that protects you, that protects your jobs, that protects your incomes, that gives you and your communities real alternatives. And that's where we have to get real about transition planning, not just throw nice phases out about just transition and so on. And I think we have to get concrete about fleshing this out, because a lot of people hear just transition and they think it's a token nod, and they think it means somebody's coming to take something from me. And so, they throw this phrase around, just transition. We have to get concrete and real and detailed and pragmatic about what a fair transition plan actually looks like. And if we start now, with a plan, and we look at a 20 or 25-year plan and we stick to it and we hit targets as we go, we could do this without a single involuntary layoff. There are examples of transitions around the world, they're cataloged in our report, that show we could do this without a single layoff or community disruption. So this is some work that we did in our center in conjunction with Environmental Defense. The website for the report is there, and I'll send that around in the chat in a minute as well. But the key finding is that time is the best friend of transitions, and the key is to start now, not wait till the end. If you wait until the end, then you're going to have chaos and disruption and dislocation, and we've seen that before. We saw that with the cod fishery in Newfoundland when it was shut down suddenly. We saw that with the forestry industry out west when it had a partial collapse, partly because of environmental factors. So start now, take advantage of the normal flexibility and fluidity in labor markets. We assembled data showing that over 10% of fossil fuel workers leave their jobs, most of them voluntarily, in any given year. So if you capture that ongoing fluidity and mobility in labor markets and make sure that you're not backfilling with young people who you've tricked into joining an industry that has no future, you can take care of most of the problem through normal attrition, retirement, and transitions. In fact, within 20 years, you lose 85% of those positions just through normal exits. So, and then strengthening those transitions through things like early retirement incentives, retraining and relocation supports, alternative job creation, and so on, makes it a no-brainer. It is absolutely possible to do this, and I've challenged in the consultations that just completed, I challenged the government to say, we will commit to doing this without a single involuntary layoff, and it absolutely is possible. Over 20 years, given the small number of people who work directly in fossil fuel production, you're looking at transitioning away from 8,000 jobs a year. More than half of that is going to be eaten up through early retirement. So you could provide transition supports in different forms equivalent to $250,000 per job. That's pretty good. I've done a lot of transition negotiations over my career, and $250,000 per person in transition support is pretty good for retirement, for retraining, for relocation, for income insurance, where you could guarantee someone's income until they got a new job. And make up the difference between the new job and the existing job if there was a difference. That's $1 billion a year. And I know Seth threw out a much bigger number for a just transition plan that includes a whole bunch of investments in alternative job creation and so on, which is absolutely needed and absolutely valid. But in terms of taking care of the workers, $1 billion a year is There's a technical term in economics, sweet fuck all, SFA, in the grand scheme of the costs of financing our energy transition and the huge investments that are made in the energy industry, including fossil fuel companies every year, and the size of other COVID supports on the side of the federal deficit. They could put $1 billion a year into this for 20 years to ensure no involuntary layoffs, and no one would even notice. Finally, let's get real about stock markets. And again, I've talked about the frenetic paper trading and buying and selling of derivatives and so on. The daily market update reports that clutter our TV and radio news, like this guy here on the top right. You know, Joe Blow Broker comes on every day and tells us the markets are up 2 points because investor confidence strengthened. Then he comes on the next day and tells us the markets are down 2 points because investor confidence weakened. I notice here, and if you look at this picture in the bottom left of these very stressed out bond traders, that guy in the middle looks a bit like Stefan Dion. And I'm wondering, I know his first kick at the Green New Deal didn't go very well for him for various reasons, and I wonder if he's got a new career in finance. I don't know. Anyways, Stefan Dion's getting the last laugh because the things he proposed back then, over a decade ago, are in fact the things that are common sense wisdom now. I have written a lot about the difference between the paper economy and the real economy. This is one of my 6 books that you initially mentioned in the introduction very kindly. Paper Boom, published in 1999, critiquing the stock market and the whole financialization of our economy. And I will point out, I accurately predicted the meltdown of the dot-com stock market boom that happened in 2001, just 2 years after this book was published. So, you know, I will also, I should note, I'm constantly predicting financial meltdown, chaos, and the destruction of capitalism. I'm a left-wing economist. That's what we do. So, you know, the fact that one of those predictions came true, I shouldn't really over-stress. In fact, I have successfully predicted, I should say, 14 of the last 2 global economic recessions. So that's the kind of forecast that I make. But this one turned out to be true. And I think there's a lot to be said about the role and the phony prestige and the exaggerated self-importance of the financial industry. And this includes, in some ways, pension funds. So some things we got to keep in mind as we're thinking about what role do pension funds play in winning this debate over sustainability and phasing out fossil fuels and getting to net zero. First of all, stock markets do not raise money for growing companies. I know that is written in the mission statement of the Toronto Stock Exchange and every other paper casino, and it isn't true. It isn't remotely true. They do not raise money for growing companies. In fact, on a net basis now, stock markets take more money out of companies than put in through all of the share buybacks, preferred payouts, dividends, and retirements and mergers. There's less money that goes into companies than are taken out of companies. It's a mechanism for rich people to manage their wealth and get richer. That's very different from saying that we raise money for growing companies. By the same token, you aren't rewarding a company by buying its shares, okay? And you're not punishing a company by selling its shares. Buying a share of a company is not like giving them a cookie for good behavior. People buy shares because they expect its price to go up in the future, unless they're a short seller, in which case they buy the shares expecting its price to go down. And you are not facilitating the company's growth or capital spending by owning its shares, particularly when you're buying shares on the secondary market, which accounts for about 99.5% of all the share issues, all the share transactions that go on. There is a little slice of new offerings where companies are raising new money by selling new shares, but that's very insignificant in the grand scheme of what the stock market does, and insignificant in the holdings of pension funds. So you don't starve an industry of capital by not buying its shares. And I think we have to be pragmatic and realistic and credible in arguing what are pension funds' potential avenues of leverage. And there is a kind of simple-minded idea out there that you help the industry when you own its shares, you'll punish it and stop it from growing by selling its shares. And that's nonsense, friends. It's well-intentioned nonsense, but it's nonsense all the same. If an activity is legal and profitable, capital will find a way to make money from it, whether you own the company's shares or not. And in fact, even if you shut it off from access to the stock market entirely, which seems unlikely, you can still have private equity and all other forms of finance that can go in to take advantage of that. The way to stop the industry from polluting is to put in place binding enforced regulations that limit its pollution, and build the public support that's necessary to win those regulations and have them put in effect. We're not going to stop it by selling the company's shares. Finally, and this is again where we need a little bit of humility, there are vastly overstated claims made about how important pension funds are in shaping the overall direction of the economy and even the financial sector. And individual pension funds are very important as large institutional investors, especially the CPP plan and the teachers plan and so on. But pension funds do not control the stock market. Their share of total equity ownership is modest, below 15%, and falling. Why is it falling? Mostly because fewer and fewer workers have a pension plan through their workplace, and fewer of those plans are defined benefit plans. Instead, they're defined contribution plans where they all get dispersed in these individual accounts. So the idea that we somehow control the shots because our funds have a lot of money in them, we also have to get realistic about. Now, all that being said, that doesn't mean we throw up our hands and do nothing. And I said at the outset, this is a historic struggle for the future of our society, the future of our economy, and the future of our planet. And the labor movement has a responsibility to use its leverage wherever it can. And I think that there are ways for us to do that, maybe nuanced and modest, but genuine and credible, for how pension funds and labor's involvement in pension funds can make a contribution in that struggle. Not to have a clear conscience, and the thing that drives me nuts are these private, for-profit, so-called ethical mutual funds, that try to capitalize on people's fear of climate change and their concern for the environment to say, buy my mutual fund instead of theirs. They're perpetuating all of those myths about financial investment that we just challenged. And don't think that you're going to stop the industry and then this is your act. This is like a financial equivalent of clicktivism, thinking you've done something just by clicking something online. You're not doing anything by selling the share of a company either. Frankly, if anything, you might be giving an unethical investor an opportunity to profit from an artificial reduction in the price of that share relative to the profit stream that the business offers. So don't do it for the wrong reasons, but let's do it for the right reasons. We have to be on the right side of this. Pensions are an important institution in our society, and unions are important players in pensions. So we have to use the pulpit or the podium or the platform that we're provided there and the influence we can wield to advance this struggle. And here, to conclude, are 4 ways that I think pension funds and labor trustees can play a genuine role in advancing the struggle for a net zero economy and the phase out of fossil fuels. Engagement, of course, is a big thing of what institutional investors do, and there's lots of things we can engage with the companies whose shares our pension funds own to demand clearer disclosure of the risks they face because of the elimination of fossil fuels, plans to manage that risk and get out of fossil fuels over the next 25 years, plans, not token statements and greenwashing, but actual plans. And because of pension funds' stake in the long-run viability of those assets and the long-run value of those assets, we've got a legitimate reason, absolutely legitimate reason. There's no debate about fiduciary responsibility. In fact, fiduciary responsibility requires us to go to those companies and say, what the hell are you doing? Because this industry is going to disappear in the next 25 years, and you need to have a plan for it. Divestment can also be effective if we're doing it for the right reasons and in the right ways, not passively selling our shares in oil companies so that we can sleep at night, but using it as a tool in this political struggle. It obviously reduces in some ways the financial risk the financial risk to pension plans to get rid of the assets of companies whose current business is going to disappear over 25 years. Now, I think we have to be cautious here. We often hear, I think, a kind of wishful and somewhat simplistic argument that fossil fuel industry has not been profitable, so funds that get rid of the shares are going to have a better rate of return. That's true at some times. It isn't true all the times, and there are times that fossil fuel industries are vastly profitable, including right now, by the way, with the whole rebound in oil prices since the worst days of the pandemic. Funds that own a lot of the Canadian oil industry are making a hell of a return right now. So we have to be cautious in that argument that we're just doing it in order to maximize returns. I think we are ultimately driven by a bigger mission than that. But there is obviously a long-term financial risk facing investors in fossil fuel companies that can be managed through divestment. It also just makes a very, very powerful statement. Jason Kenney goes bananas when powerful, legitimate institutions like universities and community foundations and pension funds say we're not going to buy the shares of oil and gas companies. And it isn't because he believes the industry is going to be starved of capital. It's because he understands this is a devastating blow against the social legitimacy of that industry. And especially because pension funds are seen as serious and dollars and cents institutions, that blow is painful. So if we do it for the right reasons and make a hell of a lot of noise about it, divestment can be a very powerful strategy. As pension funds, we can also advocate with government. I know that, we have, again, a clear box around what pension funds can and cannot do for our members in terms of the laws and the regulations, but absolute legitimate argument, because pension funds are in this on a long-term basis, not just looking at next quarter's returns. We have to match the long-term investments of these funds with the long-term liabilities associated with our members' pensions, and that means we need some certainty and we need some clarity, and we have an absolutely legitimate role to play advocating to government, saying, look, net zero is coming, we need a plan, we need clear regulations, we need stronger targets, and we need enforcement of those targets, not just namby-pamby feel-good statements at election time, because these are the things that are going to determine whether the investment choices we make as funds are going to pay off or not. So in that regard, pension funds within their remit can absolutely be strong advocates for a better climate policy, better transition plans, and clearer targets. Finally, and this is where we come back to my paper economy versus the real economy distinction, I think pension funds can and should take an active role, a more active role, in supporting and financing real investment in the sustainable net zero economy, including renewable energy industry expansion and rollout, all of the infrastructure that supports it, and industries that depend on or are linked to the energy transition, things like electric vehicles and components production and all the technology that we could be manufacturing in Canada as part of that energy revolution. Pension funds have found all kinds of ways to get around the middlemen, if you like, all those stock and bond traders, and put direct equity into things. Usually it's been real estate or, unfortunately, privatized public infrastructure. But there are other ways that role of pension funds as facilitating direct real investment could be more beneficial, including strategies to invest directly in companies and industries that are going to expand and profit as this energy transition occurs. I think these are all ways that are realistic. They aren't promoting a myth that pension funds control capitalism. They aren't promoting a myth that selling a company's shares is a way of punishing it, but they are realistic about where pension funds have genuine influence on real investment decisions and, perhaps more importantly, politics. And I think within the legitimate accepted role of pension funds as providing for the long-term financial security of their members, it is absolutely legitimate and essential that pension funds play a role in that political struggle, and union trustees should use that table anywhere they can. Here's a couple of my heroes, but of course we've got Canadian equivalents of these. We have a responsibility to act. The union movement has to be on the right side of this. It's nonsense that workers are threatened by renewable energy and net zero. We are threatened by not doing renewable energy and net zero, and let's make sure we're on the right side of it. Thank you very much for your attention and for organizing this conference.